Good afternoon and welcome to our bi-weekly Cows and Chaos webinar series. My name is Dean Dick with the Ag Info Center, and I will be moderating this webinar today on the cattle market update. We're pleased to have Jason Wood, our provincial livestock market analyst, here to do the webinar. So just a reminder that if you want to see any of the previous webinars in the Cows and Chaos series, you can migrate over to the Alberta Agriculture and Forestry's YouTube channel, and there is a playlist there with all the previous webinars that we've done. A couple of reminders here before we get started. The first is that the webinar is being recorded, so we can post it later. You'll receive a link to the recorded webinar in an email tomorrow. The second is, if you would like to ask a question of our presenter, there is a question box on your GoToWebinar control panel. Please type that in. We don't do audio questions. Just type in your question, and we will pose it at the end of the webinar. So with that, I'm going to turn it over to Jason for the cattle market update. Jason.
Perfect. Thanks, Dean. So welcome everybody. Thanks for joining us this afternoon. So I'm just going to go through sort of similar to some of the previous presentations I've done here. I'm going to go over cattle inventory. Those numbers were released this past Tuesday. So I'll just go through what the numbers came out for Canada and Alberta. I'll talk a little bit about the US as well in there, what their inventory numbers are. I'm going to talk about movements, so live exports, and then also on the import side, what's coming in, what our fed supplies are around cattle on feed, slaughter numbers and expectations for this year, and then I'll also go into just a little bit on beef production there, as well as the other proteins as well around chicken, turkey, and pork. And then also on the export side there's a lot of well, there's actually one main issue that's affecting our markets right now, so I'll talk about that and what that's doing to all commodity markets, but look at cattle futures here and how that's affecting our local price, and then talk a little bit about basis and some of the issues that are taking place there. I have a couple slides on feed just to give where average feed prices are, and then an outlook on sort of what the next few months holds for cattle markets. Of course, that's going to be a lot of variability in there, but we'll talk about that when we get there. So on to cattle inventory here. So as I said on Tuesday, just a couple days ago, Stats Canada released the Canadian and provincial numbers for cattle throughout, as well as hogs and sheep and stuff there for January 1st. So we had total Canadian numbers. So this is all cattle was down 2%, or about 220,000 head to 11.22 million head. Alberta, we had the largest decline in cattle numbers at 120,000 head year over year, and that was followed by Saskatchewan and Manitoba that each had about 30,000 head decline. If we look at sort of dividing Canada into two parts, so Eastern Canada, our total cattle numbers were down, or sorry, Western Canada, our total cattle numbers were down 185,000 head, and then 35,000 head in the east. So this chart here looks specifically at beef cow numbers and heifer retention. So on Canadian beef cow numbers, we had 3.561 million head on January 1st. That's a decline of 2.6%, or just under 95,000 head from a year ago. Retained heifers was down 6.3% year over year. So as you can see by the red line there, you can see that our heifer retention has been declining for the last couple of years. And that fits in with what we've been seeing in slaughter as well as placements in feedlots. If we look at sort of that share of cattle, it doesn't change very much. Alberta still has the largest share of beef cows in the country at 41%, and then Saskatchewan 30%, Manitoba 11%, and then after that it's the numbers are less than 10% for the remaining provinces as well as Atlantic Canada. And we had beef heifers, I said they were down 6.3%, and that was to 515,000 head. So this is the year over year change in beef cow numbers. You can see that decline of about 95,000 head in Canada. Alberta, our beef numbers were down just under 60,000 head, or a 4% decline. That puts us at 1.464 million head. Saskatchewan was down 2%, and Manitoba was 2.6% decline. The only province that had a small gain was Ontario, and it was a small gain. They were up 2.8%, which is about 69 head for their provincial numbers. And if we look at Alberta, Saskatchewan, and Manitoba, the declines in our three prairie provinces here, we accounted for 95% of the decline in the national beef herd. So it was a pretty significant number this year. On heifer retention, this is the percent change in heifer retention. So you can see in Alberta, we were down 13.5% year over year. Ontario had that small gain of just over 5%, but that equates to about 2,200 head. In Alberta, we retained just over 200,000 heifers for breeding on January 1st, and that's versus last year when there was over 231,000 head retained. And Alberta accounted for about 90% of the year-over-year decline in retained beef heifers. So we've got this ongoing consolidation in the beef herd. It's not being helped by moisture conditions that are getting more and more variable. That affected our pasture and forage conditions last year. Profit margins are declining. Profit margins are still estimated to be positive, but they have been declining over the last few years, and that's been also playing a role in these numbers here. So if we move on here and just do a quick look at the US numbers here, you can see that after they started expanding back in 2014, that went until last year, and this year as expected, just given where beef heifer retainment has been going. We expected that cow numbers would be down, and they were down this year. And we saw that they had about 31.3 million beef cows on January 1st, 2020, and about 5.77 million beef heifers retained. So they're starting to go into I guess more of a liquidation mode in the US, and we'll start to see more of those beef cows. And we've seen beef cows coming in for culling over the last few years, but we're going to see more and more of that, which will have may have an impact on price. But there's some other factors there that's been price supportive on the cow market, and I'll get to that in a few slides here. So on to movements here. If we look at live exports, this is just for Alberta. So I broke Alberta out of this to look at what our feeder and slaughter cattle exports to the US were. So in 2019, so this is for January to December of last year, our total exports was just over 327,000 head, and that's up 35% from the previous year in 2018, and it's about 18% higher than the 5-year average, which is that first bar on the chart there. Feeder exports were just over 42,000 head last year. That's up about 5.5% from 2018, and it is quite an increase over the 5-year average. But still, we're dealing with pretty small numbers there, but it's a 35% increase over the 5-year average. On slaughter exports, so slaughter includes fed steers and heifers, as well as cows, cull cows. Those were just over 285,000 head in 2019, and that's a 41% jump from 2018. And again, that's about 15% higher than the 5-year average. Now, if we step back and kind of look at Canada as a total, our total Canadian cattle exports last year, we had feeders at about 185,000 head. That's down 5% from a year ago and about 24% below the 5-year average. And slaughter cattle, so those heifer, steers, and cows at the national level for Canada, was just about 483,000 head last year, and that's about a 26% jump from 2018. So when we look at total live exports from Canada to the US, we were just over 726,000 head last year, and that's a 15% increase from the year before. But what's interesting is when you look at the total exports, we do see that we were a little bit down from the 5-year average. So our feeder cattle exports represent about 23% of the national or Canadian feeder cattle exports, and our slaughter cattle exports represent about 59% of Canadian exports. When we look at 2020 here, we're probably going to see, just when you look at cattle on feed numbers and what's happening there, that we'll probably see at least maintained or an increase in fed cattle exports to the US. And then on the import side, I'm going to get into that next here, but we're likely going to see those imports supported and maybe even higher, and that's just because of this ongoing decline in beef cow numbers. We've got smaller calf crops, and that's going to affect what we have available for feeders here. So on the live side here, you can see for Alberta and Canada, this is January to December numbers. December just came out here, and we imported into Canada. We had, so this is just non-purebred, so this is not any purebred stock, but in 2019, Canada imported just under 268,000 cattle. That's up 41% compared to 2018. Alberta's non-purebred cattle imports were just under 160,000 head last year, and that's an increase of 57% year over year. So in 2018, we imported about just under 102,000 head. So there was a jump there as well. And about 60% of the cattle imported came into Alberta. And over the last 5 years, our Alberta's share of the Canadian imports has averaged about 44%. And I think this has been out there being talked about and stuff, but you know, there's the talk that, you know, a lot of these feeders that are coming into Alberta are Holsteins, and they're coming in at a lower cost, and so you can feed these out and still pencil out a margin on these animals. So on to fed supplies here. The February 1 cattle on feed report showed from Canfax there showed we had about 1.08 million head, so just over 1 million head on feed. That's up almost 11% from a year ago, and quite a bit higher than the 5-year average. As you can see there, we're about 20% higher than the 5-year average for February. So we've had quite strong placements throughout the last quarter, or even the last 4 or 5 months of last year, and that pushed those February and feed numbers up. And those levels for February haven't been seen since about 2002. Right now, what we're seeing in the fed cattle futures, with those futures declining so significantly here, we're probably going to see placements decline, just because the feeding margins aren't going to be there for placements right now. Marketings remain higher than year-ago levels. We're up about 9% in January, and heifer placements were averaging about 36.2% in 2019. And for 2019, that range on a monthly basis for heifer placements each month ranged from as low as 30% of total placements up to a high of 44% throughout the year. So there's quite a range in heifer placements depending on what was happening in the market at that time. And for January here, heifer placements averaged just under 33%. And I realize there's a mistake on the bottom of that slide there. That shouldn't say August 1st. Anyways, we'll move on here to feeding margins here. So this is feeding margins, estimated feedlot margins on a cash to cash basis for yearling steers, placed in at about in the 800 to 900 pound range. So we know that our commodity markets are working lower just on concerns about coronavirus and how far it's going to go. That's also having while that's having effect on our futures markets, also affecting cash markets for live cattle. And we've seen basis levels weakening here over the last couple of weeks here in Alberta. When we look at fed cattle exports, and this is where we're talking a little bit about fed basis here, because fed basis has weakened a bit over the last couple of weeks, and it's just the anticipation of the increasing supplies of finished cattle that are going to be coming to market here over the next couple months, and then also the number of fed cattle that could be exported to Washington. And we do see a number of fed cattle that go from Alberta down to Washington and states around there, and there could be some negative impact there just because their cattle on feed numbers down there in Washington and Idaho are up 4.5% in Washington and 7% in Idaho. So, they've had similar things where they've seen a larger volume of placements put in, which implies larger volumes of finished cattle coming. And that may kind of, that'll put some competition for our fed supplies going down there. So we may see our basis levels start to weaken as those cattle come to market over the next, throughout 2020 here. Terminal feedlot margins on a cash-to-cash basis, they've been negative, so we've had some positive margins here the last 2 months, but there's about 18, 19 months where margins were estimated to be negative on the feeding side. And that stronger fed cattle prices in January and basis levels supported that. And then we're starting to see those margins come down again. So projected margins for yearling steers placed in February that are going to be finished in October right now are estimated about negative $45 a head, and that's on that cash to futures basis. And then also we've still got lower feed costs here, which I've got at the end of the presentation. Feed costs have been pretty stable, so that's been helping on the margin side as well. So if we look at U.S. cattle on feed here, I talked just a little bit about Washington and Idaho there, but in total for February 1st, U.S. cattle on feed was 11.9 million head, 2% above last year and about 7.5% above their 5-year average. Their numbers there, just like here, remain historically high. They did see a little bit of a decline in placements in January, but placements were still quite strong. Part of that decline is just the reduced incentive to place cattle just based on the deferred live futures. And down there in the Southern Plains, they've kind of seen some improvement or anticipation of improvement in grazing conditions, so that's holding some cattle back as well. So with that, and then that slight tightening of feeder cattle outside of feedlots, they could see placement start to slow over the next few months in the U.S. Marketings were up 1% in January for the U.S., and their feedlot margins based on cash basis there were estimated last week at about $160 a head. So reportedly right now they're averaging some fairly strong margins there. We'll see where that goes here over the next little while. If we look at packer margins, right now the reports show that the U.S. packers are probably right around $70 a head on the positive, and the one estimate I found for Alberta was around $20 a head per positive for beef packers here. There is concerns about with coronavirus, that's really having some concerns on beef demand and what that's going to do to exports and the potential for just the global economy to weaken and how that's going to affect exports, say, to China and stuff. So I'll talk a little bit more of that later on when I get into beef exports, but that's a lot of what's driving right now the decline in the futures market. So if we look on the slaughter side here, this is just Western Canada total slaughter. So this is steers, heifers, cows, bulls. In 2019, we had about 2.48 million head. That's up 5.5% year over year. We saw that steers were up 9% last year, heifers were up 2%, cows 3%, and bulls were up at 8% compared to 2018. For the first part here of the first 6 weeks here, I believe, of 2020, we've got we're up about 2% year over year at about 308,000 head. We've seen an increase in steers, up 14%. Small decline in heifers year over year for the first 6 weeks here at about 3.5%. Cows are down about 12%. If we look beyond Western Canada to total Canadian slaughter, it's up just marginally, not very much though. It's pretty much on par with a year ago levels. And in the U.S. slaughter rate now for year to date for the first bit of 2020 here is at about 3.7 million head. That's up 3.5% from a year ago. And they're really seeing an increase in heifer and cow numbers. Heifers are up 5% and cows are up 7% year over year. Also in the U.S., they're seeing that carcass weights are up quite a bit from last year, and that's translating into a lot more beef being produced compared to year ago levels. So this is just for Western Canada. I just wanted to show the ramp up that we've seen over the last few years in female slaughter. So you can see heifers are in the red line there. So we've seen that small gradual increase over time, as well as cow slaughter has been increasing since 2015, which is in line with what's been happening out in the market, as well as pasture and forage conditions and how moisture has been affecting those decisions as well. So on to meat production here, you can see that since 2014, we've been increasing both Canada and the US Canada is on the right there in red, so Canada's the red line, and it's in billions of pounds on the right. The US is on the blue line on the left in billions of pounds as well. So for 2019, total Canadian production, so this is beef, pork, and poultry, was up 1.6%. Beef was up 3.2%. Sorry, pork was up 0.5% and poultry was up 2%. In the US, they saw total production up just under 3%. Beef was up 1%, pork 5%, and poultry 2.5%. For 2020, we're expected or forecasting that Canadian total meat production will be about 10.7 billion pounds. So that's going to be about just over a 1% increase from this year. And in the US, about 108 billion pounds, which is about a 3% or a little bit more than 3% compared to a year ago. In the US right now, they had originally had estimates of about 1% increase in beef, but for the first couple weeks here, they're averaging 5% higher production levels. And for Q1, they're estimating about 3.5% increase year over year. So we may see that beef number jump up here as they redo calculations. Pork's estimated to be up about 4.5% and another 4% increase in chicken production. So on the export side, 2019 Alberta beef exports were quite good, even though we had some issues getting into China. In 2019, our total beef exports out of Alberta were 2.41 billion. That's an 18% increase by value and an 11% increase by quantity. So our total quantity exported last year was just over 326,000 tons. Our top 5 markets, as you can see here, were the United States, where we had an 18% increase in value. Japan, we had a 60% increase in value. Hong Kong, we declined 13%. Mexico was up 9% by value, and China was up 4% by value. Alberta maintains that average of about 76% of beef exports by tonnage. And, we saw some, with China reopening on November 5th of last year, we've had, we're starting to see some numbers go back into there. On the import side, we've actually seen, our numbers were down last year. When we look at a volume basis, we were down about 12%. So we had a 10% decline in beef imports from the US, 29% decline from Australia, 30% from New Zealand, and 17% from Uruguay. Australia and New Zealand, they've been dealing with some issues there. They've really chosen to focus on exports to China, and then also the ongoing drought, and now with the fires and stuff that were going on in Australia, their beef herd is down quite a bit. They've had some fairly heavy female culling, and so their beef numbers are down a bit. So we're actually going to see declined production. All of that's played into really good prices for grind, and that's been one of the issues. That's one of the things that's been supporting the cutout over the last little while here. For Canada, our total beef exports, you can see here, we exported 3.14 billion, or just over 431,000 tons in 2019. Since 2012, Canada's exports by value have increased 162%, and our tonnage is up 60%. The top 5 markets for Canada, same as Alberta. We had 2.26 billion into the US, 156 million into Hong Kong, 354 million into Japan, 127 million into Mexico, and just over 100 million into China. So now we'll look at some market stuff here. I'm going to just briefly touch here on the beef cutout value, the Canadian beef cutout value for the AAA, AA blend. For 2019, the value was up 4% over 2018. So we did see some, even though we haven't, by the black line there, you can see that we did have quite a bit of variance in the price. It did follow the, sort of that long-term pattern. We did see a run up there last November that was supported by higher grind prices, was one of the supports there. For the start of 2020, we're averaging about 2% lower than we were in 2019. And some of the issues going on here is upcoming, the anticipated supply of finished cattle coming. There's lots of pork in North America. And then we've got this really unknown demand affecting both the domestic and export markets. And that's, the markets are really haven't finished digesting coronavirus and what that means to, for over the next little while, whether it's going to become more, whether it's going to increase in North America and other countries, or if it's going to start to fall off, similar to what we saw with, if it's going to follow a pattern of SARS that we had 20 years ago. So byproducts, unfortunately for values for Canada, there hasn't been good reporting here over the last little while, but when we look at the US values, you can see that they've really come down since 2014, and now we've been sitting in that range of about 12 bucks a hundredweight. We did drop down last spring there after we saw the some of the issues with China, but those values have regained a buck there since that time. And really, I just wanted to show where byproduct values is, because it is a lost margin that impacts cattle prices throughout the supply chain. So as these values come down, as we continue to see hide prices being affected, and then as well as the offals and other byproducts, it does have an impact on that live cattle price that that feeds back into the market. So we'll talk a little bit here about the futures here. This is the June live cattle futures here. So this morning you can see we were down at 102. It did come up a bit after that and then kind of settled back down after that. You can see that we've had a big drop here since the start of January. We've lost about $17 has been taken out of the market here in fairly short order. We've got a lot of speculative longs that are in liquidation mode, and they're leaving poor liquidity in the cattle contracts. And it's all around this concern of future demand and domestic and export sales. There's not very much buying interest right now for contracts. And really what the markets are looking for is just some good news that coronavirus is under control, and that we'll start to see export demand pick up again, or not necessarily export demand, but export flows that will pick up. We also have lots of feeders, which I talked about cattle on feed there. We've got lots of placements that have happened. So we've got a good volume of finished cattle coming. We can see that in our, not only with the live futures coming down, but also those coming volumes of finished cattle. That's affected our cash. Cash this week was about 115, 125 for US for fed cattle that were offered on the cash market. And so we're really just kind of looking forward to see what's going to happen here. One of the other things that that's out there right now is forward beef sales, and this is looking at beef sales for delivery after 61 days. So after the next 2 months, we're getting into barbecue season. We should see stockpiles coming up for preparing for that. But those sales are running about 38% below last year. So there is some hesitation there even to forward buy without knowing where things are going to be in the next couple months here. And the other thing that is out there is when we look at, I mentioned Australia, New Zealand, we've also got Brazil. They're heavy into exports into China, and China's a little bit backlogged at their ports right now. That's starting to get cleaned up as workers have come back to work. Containers are being processed through the port. So we are starting to see that backlog cleaned up. But depending on where that goes, where demand goes out of China, how long their food service industry and anybody who's under, for the people that are staying home, food service is being hit quite hard. So there's a big hit there on beef as well. So that's all going to have that negative effect on prices here. So that demand side is really playing here. So if we look here locally at steer calves, you can see here that the current price last week, we were averaging about 232 and a half. That's about just under about $12.80 a head for a 550 pound calf. So far this year, prices have been increasing here. We've seen that seasonal increase in calf prices. A lot of that has been on the potential for grass cattle. So there's been some good seasonal strength there, and the positivity around the potential for good spring moisture and pasture conditions. There still is an opportunity for softer prices, moving forward, just depending on where those future contracts go and what those, the deferred contract can be placed against on these. But there's quite a bit of time on the calf market there to see where those go. So on to yearling steers here. Last week we're at about 181 a hundredweight, or about 1530 a head for an 850 pound yearling. Year to date we're averaging about 183, so we're on par with a year ago. We're about 7% below the 5-year average. Typically we would see this, we typically have this seasonal decline, so this isn't unexpected. And then we'll start to peak after, or start to climb there after April. But this decline isn't seasonally, it's expected. And then you can see there on the chart I've included the dark blue triangles, and that's sort of that's the futures-based price, projected price for Alberta. So you can see projected prices are moving higher there. But as we continue to see the sort of the influence of coronavirus fears, we may see those prices pull back here a little bit over the next little while. So right now we've got prices projected, in the low 170s for early spring, and then up into that 200 level for the fall. The basis this year, I'll talk a little bit more about basis, but our basis has been stronger this year. We're about $2 to $9 per hundredweight stronger than we were a year ago on the basis level, but it's still, the potential for that basis to weaken over the next little while is always one to be watched. So this is the basis here. You can see that we're running a bit higher than the 5-year average. You can see where we did have that run up there at the beginning of the year, and then we did come off as we saw the markets fall back. And then we're going to see just where placement demand goes here over the next little while, given the deferred live contract, and how that might see basis levels weaken a bit more. For right now, they're just following the seasonal pattern, which is to be expected. So if we look here at the live cattle market, sorry about that. So for Alberta fed steers last week, we were just over 150 a hundredweight, which is just about $2,035 a head for a 1350 pound finished steer. We're averaging this, we've had quite a bit of fallback in the prices there. You can see from the first 3 weeks of reported prices in January, and then over the last 3 weeks, prices have really come down. And a lot of that is just following the futures down, and then also a weakening in the cash market as well. Our Fed basis levels, they've weakened since the start of the year, and I'll get into that into the next slide here. I'll just show a little bit on Fed basis as well, but those have weakened. We were about $13 above, $13 hundredweight above a year ago. That's still about $4 weaker than where we were against the long-term average. If the Fed basis can remain stronger than a year ago, we'll see what happens here. But we have to remember that, with current market conditions, we may see that Fed basis actually weaken quite a bit. Hopefully it doesn't go down to levels that we saw a year ago when we were down to about $20 under on the basis. But we'll have to see where that goes. So this is the cash to cash basis here. So Alberta versus Nebraska. You can see here that, for the start of 2020, we're averaging about 220, 225 under on the cash basis. We are quite a bit higher than where we were in 2019. And we're stronger than the 5-year average, but that basis is continuing to weaken here as well. So we'll see where that, we'll see where it goes. On the cull cow side here, we were averaging about 87 bucks a hundredweight last week. We're up about 5% from where prices were a year ago. And even though we were up from a year ago, we're still down. You can see the influence of a few years ago when prices for cull cows were quite strong. So we're about 15% under the 5-year average. We should see the cull cow market strengthen into the spring. Over the long term, that can be upwards of a 15 to 20% increase in price into the spring, into that April, May. We'll have to see where that goes. Right now, there's a lot of support for coming from lean grind beef. Those prices have been very strong. Those prices are starting to weaken a bit now. So we'll see how that plays in. And then also as we see more cows coming to market in the US, we may see that price start to, we may start to see some resistance on the price as well. Here as well, we're also likely going to see some more cull cows coming to market over the next few weeks here. I'll talk about slaughter here, or I did talk about slaughter, but we have seen our slaughter numbers down on cull cows so far this year, and those are likely going to start to pick up here over the next few weeks. So when we look at cull cow prices here, I just wanted to add in 2 slides here. One shows this is for Western Canada, and then I've got one that also shows for the US. But I just wanted to show this trend increase in the blue line here is weekly slaughter numbers. So you can really see this trend in weekly slaughter that's been increasing since 2015. Prices have been trending down following a seasonal pattern, but the increase in slaughter is one that really does support the ongoing decline in our beef cow numbers here in Canada. For 2019, the movement that we had, so looking at how many cows were slaughtered, how many cows were exported out of the province, 2019 was one of the highest years that we've had. The only years that were higher were 2002 and then 2008, 9, and 10, and those years weren't too much higher. For 2019, we had the numbers come in at about 325,000 head, which is about 0.5% higher than we were in 2018. And for January here, for the first month of January, our movements here in the province of cows, this is going into slaughter and exports, we're about just under 2% above the 5-year average. So we are still seeing a lot of cows moving here as well. Onto the US, it's a similar story. You can really see that ramp up in slaughter cows down there, slaughter numbers, weekly slaughter numbers, as they have slowly been increasing the herd, which has also been increasing the number of cows available for slaughter. And then we'll probably see this number now as they move into liquidation. We should see this number climb up quite a bit more. So we've got a few slides here on feed prices. This is feed prices. So for wheat, barley, and peas, these are based out of southern Alberta. You can see that prices did, after falling quite a bit there in last fall, they did recover, and they've been pretty steady since then. We've seen prices, for feed barley and feed wheat sitting in that 230 range, 235 range per ton. When we look at barley here, one of the things that that's been seeing is domestic use. So this is elevator barley. So domestic use of elevator barley has been higher this year. So we've had domestic use in 2019 of about 869,000 tons for this crop year. And that's versus just about 601,000 tons a year ago. So it's 44% higher domestic use on barley, and that jives with the decrease in corn coming into the province for feeding, as well as more cattle being on feed and barley going into the feedlots there. On hay prices, this is just a provincial average, just to show the trend in what's happening. We are seeing those prices strengthen here again through the winter. Provincially, the average has been around 8.6 cents per pound. That's up about 1 cent per pound from a year ago for the start of the year. And really, this is just to show the trend in that we've been seeing in hay prices and how they have been increasing, for the last number of years, with without much price correction coming back down. So if we look at barley versus corn, I had said that we had increases use of barley here with our domestic use. Here you can see this just compares Lethbridge barley with the Omaha corn price. And year over year, we've seen barley prices have decreased. So if we just look for where we are right now here for the second week of February, third week of February on pricing, barley prices are down about 9.5%. Corn's up about 3%. And what we've seen with that, is that barley prices come down, corn has kind of come up a bit. The feeding, our feeding advantage here in Alberta, we were at a feeding disadvantage there for a while. That feeding disadvantage is coming to an end, and we're kind of moving, we're almost on par for a feeding advantage for feeding cattle here versus feeding cattle in the US. So if we just look here for prices here, this is just looking at estimated an estimate of projected prices and using where the futures contracts are right now, exchange rate basis levels, and then also looking at seasonal price levels to see what's going to happen here. There's a lot of stuff at play here, especially with the effect of coronavirus and what that's doing to commodity markets. So these prices may be out of date by tomorrow morning, but the Fed market, we're still dealing with a lot of that trade uncertainty, the potential for beef demand to slow down due to those global macro factors. We've got weakening basis levels here. And so that puts, our Fed prices, right now for when we look into the, over the next few months here, probably in that mid 140s to 150s range. We've been dropping pretty fast here. We're, at 150 last week. So even going into the mid 140s, that may even be a bit high of a right now. But there is a lot of positivity in the, for markets. It's, once we get past, where the markets can digest and get some positive news that the virus is under control, then we should see some pretty good support for cattle prices after that. Just when you look at the impact of African swine fever in China and how much of their hog herd they've lost, when you look at the decline in cattle numbers coming out of Australia, there is a lot of positivity there, and we should see a lot of positive support for beef and cattle prices after that. But right now, that's kind of the range looking at right now. But there is a potential for that Fed steer price to even fall below that range that I've listed there. On the on the call cows there, they were 87 last week. When you look at where the seasonal, that seasonal movement comes in, and the if we can maintain that strength on trim prices, you may see those prices push up into the mid 90s going into the spring. But given that we've kind of seen a little bit of weakness here over the last few days on trim prices, we may see those prices pull back a little bit, and then it'll also depend on how many cows end up coming to market in the US and Canada here over the next little while that could impact that price right now. But just if all those things remain constant and we just look at that seasonal thing and the potential for movement in beef prices, then we or on trim prices, we should see that we could see that call cow market strengthen up here anywhere into that mid 90s range. We are seeing, as I mentioned, more product work its way through Chinese ports, so that is positive for getting more beef and pork out of North America. For yearling steers, we're at, as I mentioned, 180 last week. Right now, just given where contracts are, deferred contracts, live contracts are, we could see those prices move down into, the mid 170 to the low 180s. Since we're already there, halfway there, maybe the low 170s is more appropriate, but there is going to be some seasonal weakness there before we start to see those prices increase in the summer. And on the calf market, there's a lot of support for calves to stay pretty constant in price. I mean, we're at 232 last week. We might see some weakness there in calves just as the support to place them against deferred contracts kind of diminishes that margin. We could see those calf prices pull back. It also depends on what moisture conditions happen here over the next few months. But there's a lot of support for calf prices to maintain and stay pretty steady where they've been for the last few years. And just when you look at our beef cow numbers and our calf crop, there is a lot of positive things there in the calf market moving forward. So overall, just it's kind of the things to watch. We do see our beef numbers here, our beef cow numbers here declining. We had, I guess, more of a substantial decline this year compared to other years, but we've kind of been maintaining. But we're still having a slow pullback. Meat production in the U.S. is up for all proteins, and if that product isn't moving, we could have a lot of product here in North America that would have to be eaten, for lack of a better word. The U.S. beef cow herd, they've moved into that expansion is finished. Now they're kind of transitioning into that liquidation phase. So as we see more and more cows come to market, that could put some pressure on prices here as well. I mentioned Australia. Brazil, with their beef and pork, their production numbers are increasing there. They're also increasing their exports. So there's some temporary issues there around getting product into China, which may weigh on beef prices globally here over the next little while. I talked about ASF briefly there. It's still spreading throughout Asia and even throughout Europe. There is a lot of work being done here in North America and the US and Canada on keeping our area here ASF free, which is very important. Some stuff around trade agreements. We've had phase 1 announced with the US and China. Where that goes right now with the clauses in there around the ability to delay imports and stuff, and then as China continues to voluntarily pull back their tariffs and stuff that they've placed. We'll see what happens there moving forward and how much product actually moves out here in the next little while. Of course, then the US-Japan agreement is going to be coming into, that's going to create some competition here for Canadian exports. Inflation is moving up on food products. That could have an impact, or will have an impact on consumer spending or consumers' discretionary spending on what they buy. We do have that global protein demand. We had depending on which number you read, a huge, upwards 50-60% of the Chinese swine herd taken out by ASF. So there is a huge void there of protein that does need to be filled. And that is a real positive for our markets here. We do have a lot of trade uncertainty right now that just centers around, a lot of that I think is being focused on coronavirus and what's going to happen there, and that's putting a lot of volatility right now into the futures market as well. So with that, can open up to any questions.
Thanks, Jason. A lot of great information there. You kind of boiled it down at the end. That was excellent as to figuring out, where things are going to go this year. So we don't have any questions posted as of yet. So we've got a few minutes here that people can just remember to type in your questions into the box there, and I'll read them out for Jason. So I think, one thing that I've noticed here is that there's been quite a decline with the January 1st numbers in Alberta. That was the first thing that you mentioned on the watch list there in the last slide. Is there the reasons for that? Could that be profitability? Could it be ages of operators and they're just looking at the markets and going, maybe I don't want to participate, or level of risk? Any thoughts on that as to why the fairly large decline that we've seen on the January 1st numbers?
I think those points there, one is, definitely age of operators. It's not getting any younger, so I think that feeds into there. I think the risk in the market right now is also playing a role, and then I think, even a bigger one is just the instability and, sort of around, moisture conditions that we've had over the last few years. If you look back at 2015, we were, ramping up for expansion. We had heifer retainment increasing. And then conditions were really dry in that, the spring of 2015, which pushed a lot of those cows or heifers back into the market. And then since then, it really hasn't taken hold, for any expansion. And I think, part of it is just that, that unknown around moisture conditions and the variability that we've been seeing. And then also the other one in there is that we have seen, the margin for cow-calf producers has been declining. It's still, positive right now, but it has declined quite a bit from where we were, even 5 years ago.
Good, thanks. Still, we've got some questions. We don't have any questions yet, so I'll give it a couple more minutes for people to pose anything if they've got it. And the other thing I noticed too is in a lot of graphs, we're quite a bit substantially below in the 15-year on the 15-year averages for prices. So I don't think, it doesn't look like we're going to get there anytime soon. So are the price ranges that we've got now, that's going to be probably the trend for the next little while, as the, with the factors that you pointed out, especially, to me, it's the US, China, US, Japan trade agreements that they've got going here.
Yeah, I think the prices that we're at right now are a pretty good indication of where we're going to be going. Just when you look at the global numbers for cattle numbers and hog numbers for those populations, the decline in those numbers suggests that we should, those prices should be supported, getting past any of the short-term things that we're seeing right now that are affecting the market. Part of what, kind of puts us below, and that's part of the, issue with comparing to averages, to long-term averages, is that, 2014, 15, we had a real run up in prices there. But we had a lot of factors going on there. We had the outbreak of PEDV in hogs that year. The U.S. started expanding their cattle herds. There was a lot of, there's a holdback of cattle there. We had some other global issues happening, and all those kind of came together to push up, to push our cattle prices up quite high, for that short period of time. And so those years are still playing into that long-term average, which is kind of, which puts our current prices quite a bit below that average. But, where we are right now compared to long-term, we are still, if you look at sort of that long-term trend, prices are, still good compared to historical levels. So, and, what I was saying there before about, what's happening with other producers of other beef producing countries, and just what's happening with their inventory numbers, Australia, New Zealand, and then Chinese pork numbers or hog numbers, it all does have some, some potential to really support our markets here over the next little while.
Good, that's excellent. So actually we don't have any questions posted, so I think what we're going to do is we'll close off the webinar. I'd like to thank Jason for excellent presentation. That's a good foundation for doing a little bit of planning as far as some risk management and figuring out your margins in addition to knowing your cost of production. So with that, we're going to end this off. And like I said, you will get an email tomorrow with a link to the webinar that's been recorded. So with that, thanks, Jason, and we will close off the webinar. Have a great afternoon.
Yeah, thank you.